Is this a way to avoid inheritance tax on property? So this comment was in relation to me posting about ladybird deed or transfer on death deed, so that real property can transfer directly to a beneficiary when the owner of the property passes away. And no, it's not so you can avoid inheritance tax. Whatever makes up the decedent's estate when they pass away, the total value of everything they own is what is taken into consideration if any inheritance tax are owed. But the good news is, at least here in Florida, there isn't a state inheritance tax. So the state itself doesn't charge an inheritance tax. We follow the federal guidelines for that. And currently, right now, the federal guidelines regarding what's exempt for taxation purposes is if you're an individual, your estate can actually be valued at $13.6 million and transferred to beneficiaries without there being inheritance tax. If you are a married couple, the total exemption amount is $27.2 million. So a married couple can have an estate of, roughly $27 million and still be under that taxable limit for inheritance tax currently. Now those numbers can change. That current law is actually subject to sunset in 2026. However, it varies with the political climate. So it's a good chance that it won't be changing with this current administration, but it's always a good thing to look out for, because those numbers can fluctuate and it will determine who would end up paying an inheritance tax. So it's good to stay on top of that, especially if your net worth or your entire estate is hedging towards that 13.6 if you're an individual, or 27.2 if you're a married couple. And also, if those numbers change drastically, you might have to do some changes in your estate planning. The other thing that's really nice about inheritance is it's not considered income from the IRS. So if you inherit, say, a $200,000 property from your mom, the value of the home is $200,000, the IRS doesn't look at that as being income, even when you sell it. Now, if you sell it years and years later and it appreciates in value, there could be capital gains tax. There could also be capital gains tax associated with other types of inheritance, when you're inheriting things that are maybe in brokerage accounts or things of that nature. But if you're in Florida and you're inheriting from an individual, there's no tax on the estate itself if the entire estate is not valued at more than $13.6 million, or there's no tax on the estate itself for married couples if it's valued at under or $27.2 million or less than that. So those are good numbers that we're looking at now. Unfortunately, just slapping the TOD or the ladybird deed, that's not going to disregard the property for taxation, because it's going to be still considered part of the overall estate. But assuming that the estate isn't large enough to be taxed in the first place, this isn't something that you'll have to worry about. And again, I had this in another video. If you sell the property roughly within 6 months to a year of the person's passing, there's very little likelihood there's going to be capital gains tax as well. So in normal scenarios where someone inherits a $500,000 property from a parent, they could turn around and sell it right away and not have to even pay any capital gains tax on that, or any type of inheritance or income tax. So that's really nice. So it's a really good idea to convince your parents to make sure they do ladybird deeds. All right, hope this answers the question. If there's any other questions on these types of deeds or estate planning in general, or elder law, probate, and you're in Florida, don't hesitate to reach out to our office. We're at Cause Law Office, the non-stuffy attorneys, and the link is in my bio.